Welcome to the Daily Business and Finance Show. Climate controversy, Chevron's warning to California, Reddit's $5 billion leap, and China's market maneuver. Tech titans earnings showdown, Microsoft, Apple, Meta, Google, and Amazon. Pharma profits in focus amid positive vibes. Sky-high drama with Masters of the Air update. Rising credit card woes in December and ISS's bold call on Holosys ascended deal. Boeing 737 MAX returns to China skies after ban lifted. Stay tuned after this short ad break as we delve deeper into these headlines and more. Chevron's refining head, Andy Walls, has issued a warning that the push for renewable diesel in California could lead to a significant rise in gas prices. He points to stringent state regulations and the possibility of a cap on refinery profits as factors that could deter growth projects within the state. Over the past 10 years, this move towards renewables has already resulted in an 11% decrease in California's refining capacity. This could potentially pose risks to the reliability of fuel supply.
Reddit, a well-known social media platform, is reportedly contemplating a valuation of $5 billion for its forthcoming initial public offering, or IPO. The final decision will hinge on market conditions and timing. Despite having a valuation of $10 billion in 2021, Reddit's plans were postponed due to Federal Reserve rate increases and overall market sentiment. The public filing is anticipated towards the end of February with the goal to complete the IPO by the end of March.
Regulations on short-selling stocks are being tightened by Chinese authorities in an effort to stabilize the market. From now on, investors will face restrictions when it comes to lending out shares for short selling outside of a lockup period. The China Securities Regulatory Commission is of the belief that these modifications will foster a more equitable market order. Additional limitations on securities lending are anticipated to be introduced in March. This development follows as the Shanghai Composite Index has seen a decline of over 10% within the last year.
This week is set to be a busy one in the corporate world. Major companies like Microsoft, Amazon, Meta Platforms, Apple, and Alphabet are all scheduled to release their earnings reports. In addition to these tech giants, other sectors will also be providing updates. This includes aerospace with Boeing's report, pharmaceuticals with Pfizer's update, and energy sector updates from Chevron. The week kicks off with SoFi Technologies revealing their Q4 results on Monday. Following this on Tuesday is Alphabet's Q4 results announcement. Midweek brings us Boeing's Q4 report on Wednesday. As we move towards the end of the week, Thursday will see Meta Platforms, Amazon's, and Apple's earnings reports being released. The week wraps up on Friday when oil giants Chevron and ExxonMobil reveal their Q4 earnings.
Investors are keeping a keen eye on top drug manufacturers as the healthcare earnings season commences. The VanEck Pharmaceutical ETF, which represents 25 significant drug firms, has experienced a 5% rise in the previous month. Despite this, Barclays continues to hold an optimistic industry rating due to elements such as healthcare rotation and heightened deal-making activity. Johnson & Johnson surpassed Q4 forecasts, while other prominent pharmaceutical companies like Eli Lilly and Merck are well-placed for the earnings season. Concurrently, large-cap biotech stocks have made a robust start in 2024, with Amgen and Vertex Pharmaceuticals climbing nearly 9%.
This week witnessed a series of upheavals in the airline industry. Boeing faced challenges with quality control, while Spirit Airlines grappled with complications arising from its merger with JetBlue. Additionally, Southwest Airlines flight attendants are considering a strike. Despite these issues, American Airlines Group, United Airlines, Southwest, and Alaska Air Group all managed to report results that exceeded expectations. The stock of American Airlines saw an 11% increase due to favorable Q4 results and an advantageous combination of Boeing and Airbus aircraft in their fleet. However, they continue to face high maintenance costs due to the diversity of their fleet. In light of potential fare increases next year, Southwest is reevaluating its dependence on the Boeing 737.
In the final month of 2023, there was a rise in net charge-offs on credit cards, while delinquency rates remained unchanged. Despite these developments, consumer expenditure continued to be strong, thereby averting an anticipated economic downturn. The rates of delinquency and net charge-offs at financial institutions such as JP Morgan Chase, Citigroup, and Bank of America managed to stay beneath the levels seen before the pandemic. On the other hand, Brit Financial Holdings and Capital One Financial experienced a notable decline in credit quality. Furthermore, loan balances saw an increase of 2% from November figures, reaching $400.6 billion.
Institutional Shareholder Services, also known as ISS, has recommended that shareholders of Holosys Automation Technologies decline the $1.7 billion proposal from Ascendant Capital Partners. The reason for this advice is a perceived lack of effort to maximize the price. This suggestion aligns with an earlier one made by Glass Lewis. A vote on this matter is set for February 8, even though Holosys has received more lucrative offers from different entities.
Boeing has handed over its inaugural 737 MAX 8 to a Chinese carrier in half a decade, signifying the revival of an essential aviation market. China Southern Airlines piloted the aircraft from Seattle to Guangzhou, making stopovers in Hawaii and the Northern Mariana Islands. This event comes on the heels of China's verdict last month, permitting Boeing to recommence deliveries following the grounding of MAX jets in 2019 due to fatal mishaps. And that's a wrap for today's daily business and finance show. Stay savvy, stay informed, and we'll catch you on the next wave of market trends. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow dawns, take care and goodbye for now. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.